All right, let's go ahead and dive into it. Good morning, good afternoon, good evening, wherever you guys are in the world watching this video. Today is Monday, week of August 4th. We just stepped into the new month and it's been a lot has happened. Especially last week. We had a full week last week and we had GDP, actually advanced GDP quarter to quarter with USD. On the 30th, we had job openings, we had OPEC meetings, and we had the non-farm employment change, NFP, and unemployment rate and unemployment claims. So it was a busy, busy week last week. These are the numbers that they released. Now, with NFP that happened this past Friday, it resulted a 73,000 employment change. So the number of employments, it measures the change in number of employed people during the previous month, excluding the farming industry. So the number came out to 73,000. The previous number was 14,000, actually 144,000, and it dropped down to 73,000, right? You guys can see here the previous number for July. Now in August, for the month of July came out to 73,000. Now, this resulted in impact on the dollar. Obviously, when there is barely enough job openings or a small number compared to the previous numbers you see here, the past previous months were at 144K, 147, 185, and so forth. And it dropped down to 73,000, which is a huge difference. And that is resulting the dollar to weaken. The less the weaken of the labor market weakens the dollar, and it actually pushes all the assets to the upside, especially for gold. Now, it also affected the stock market. Let's go and check out the stock. The stocks uh, made a huge drop when they released the numbers on Friday. You guys can see here, this is the S&P 500. It resulted a huge drop to the downside, and now it's picking back up this morning. This is the Dow Jones, Nasdaq 100, and the Russell 2000. You guys can see the drop to the downside. This was Friday here when they released the numbers. This is resulting the unemployment claims plus NFP plus the unemployment rate that actually increased by 0.1%. Unemployment rate here is at 4.2%, a zero point 0.1 increase from the previous month. Previously was at 4.1%. They forecasted 4.2, resulting in a zero point 0.1 increase on unemployment rate, which also weakens the dollar, right? And we can look at the dollar here. You see this huge bearish candle to the downside. This was Friday right here. You see how news impacts the markets as well. And this is a clear view of what's going on. Whenever there is an impact here with NFP, non-farm employment change with unemployment rate and unemployment claims, you see unemployment claims resulted at 218,000. So 218,000 individuals in the US filed for unemployment insurance. Now, that also impacts the dollar, right? This is a lagging indicator The number of unemployed people is an important signal of overall economic health because consumer spending is highly correlated with labor market conditions. Unemployment is also a major consideration for those steering the country's monetary policy. Now, as you guys know, well, I hope you guys know, the Federal Reserve, they handle the monetary policy. So the monetary policy, their target rate is to bring down the rate to 2%. That's their target rate. Now, with these numbers, this goes to indicate that there might be a September rate cut. Now, they're predicting a September rate cut to bring it down by 25 basis points. And we can look at the CME, the Chicago Mercantile Exchange numbers. Let me see here. I highly recommend you guys check out this website. Let me actually, I had it saved here. Just pull it up on my end. FedWatch. There you go. Now, this is a tool here. Now, it went up by, last time I checked, it was at 60%, 50, 60 around there. It went up by 20%, over 20% chance. It went up just recently. Now it's at 87.9. So now this September, September 17th is the next Fed rate meeting, the FOMC. They have increased their chances to drop rate by 25 basis points. Now, based on these numbers with the unemployment change and uh, I'm sorry, the employment change, unemployment rate, it's weakening the dollar, therefore indicating a chance to cut rates. Now, I created a table, right? I created a table, economic cheat sheet, where I listed out all the top news events, especially for the US. Now, this is concerning the dollar, and obviously, you want to look at the US dollar. The US dollar is the most dominant currency. It's the number one dominant currency in the world. Now, it's very important to check out the US dollar index, and how the news impacts the markets. And the way to know how it correlates with each other and how it correlates with other assets, you can see here, I created this table and I can share this. I can create I'm gonna create a folder or where I'm gonna be posting this economic cheat sheet, or I can actually post it in my Telegram channel. For those that are in my Telegram channel, you guys will have access to this. Um, for those that haven't subscribed to my Telegram channel, I highly suggest you guys subscribe to my Telegram channel because I'll be posting a lot more resources inside that channel, including this economic impact cheat sheet. Now, I listed all the events, the news events, CPI, PPI, NFP, unemployment rate, unemployment claims, job openings, Fed funds rate, and it gives you the outcome and the market reaction. Now, just recently we had the unemployment rate. So the unemployment rate increased by 0.1%. Now it's at 4.2, resulted a hot outcome or a strong outcome. The USD pushed down, right? And it increased the assets. I just showed you guys it pushed down the USD. And for crypto, everybody loves crypto. Everybody loves to invest into crypto or even trade it. And it's right now the crypto market, as you guys can see here, this is Solana. I'm looking at this range here for a dollar cost average, this 50 to 61.8 zone. between 151, 137 price for Solana. This is for Ethereum. I'm looking at this range here for a dollar cost average, this 50 to 61.8% zone using the Fibonacci retracement tool. I use the I can show you guys here. Take the low to the high, and I boxed out the 50 to 61.8% zone, which is a sweet spot, right? It's a golden ratio. The 61.8% is his golden ratio for the Fibonacci. And I'll dive into this on later calls and how to use this tool. It's basically a retracement tool you can use uh, as a tool to look for retracements in the market. And when I mark this, I can see it drop down for retracement to the upside. So I'm looking for that zone there. BTC, this is Bitcoin on the daily. It it resulted this wedge here, this bullish wedge, and it broke below this counter trend line. However, it did not fully close to the downside. Let me see here. It pushed up, but it may continue to drop down because we also have news this week. This week is actually a quiet week. We don't have too much going on, but anything can happen with crypto, especially, right? So we have PMI. PMI is the Institute of Supply Management. It takes a survey of about 300 purchasing managers, which asks respondents to rate the relative level of business conditions, including employment, production, new orders, prices, supply, deliveries, and inventories. So this is an Institute of Supply Management. So they take surveys. It measures the level of diffusion index based on surveyed purchasing managers, excluding the manufacturing industry. Above 50 indicates industry expansion. Below indicates contraction. Now, the last number was 50.8. That was the previous number. Now they're forecasting 51.5. So it may indicate an industry expansion because if it's above 50, then it's an industry expansion. Now that's a red folder, so it's a high impact. Uh, and typically, whenever there's PMI news, ISM services PMI, um, even though it says a red folder, it tells you a red folder. I noticed that with PMI, ISM services PMI, it treats it like a mild folder. I treat it like a mild folder because it's really not too big of an impact in the markets. But when it comes down to unemployment claims, um, this will result a push to the upside, especially because we had lower numbers last week. Uh, it was at 218,000. They're forecasting 221,000. If it's higher numbers and if it's a higher number than the previous number, then that will result a weaker dollar and it will push up the assets. So, and I can show you guys here with the economic cheat sheet, unemployment claims. If it results a higher number, it weakens the dollar, therefore pushing the dollar down, and gold, crypto stocks will shoot up, right? So I may see, let me take this out. I may see Bitcoin or any crypto asset or any commodity asset. This is gold here. Oops. This is gold here. I had this zone marked up here last week. This was news, right? This was the unemployment rate. This was Friday actually. The NFP and unemployment rate. It pushed gold to the upside, resulting this bullish engulfing candle, and it's also an imbalance. So it may come back to fill this gap, this imbalance here. And keep in mind that not all imbalances get filled because there are some imbalances that does not get filled. And that's very important to keep note. But this bullish candle, I do see it coming down, and it may come down for a correction to fill up the imbalanced candle. It may come down to tests around 3,300 area. Oops. It may come down to this area here. You see we have the start of the candle here around 3,300, and we have a resistance as well, a previous resistance here. Let me take my marker here. Here. It broke above this resistance zone. It broke above structure. It may come back down to retest this area for the retest to the upside. Now, when it gets closer, I will do my markups and my analyticals. By Wednesday, we'll see if it will push down before the move back up, or it may continue to the upside. Here, after Friday's news, it was consolidating for a bit, you know, and typically after every news event, there's always a consolidation happening. So, for example, Friday, it resulted NFP, unemployment rate, bringing numbers down. Unemployment change numbers came down. Unemployment rate increased by 0.1% to 4.2. It increased a bullish candle in gold and a bearish candle in the dollar, right? So you see here, this was a dollar Friday. You see how it's an inverse relationship? So with the dollar, it weakens the market, resulting a bearish candle to the downside. Now, gold resulted a push up to the upside. Boom. See here to the upside. Boom. Card is blue. And this is after news. It started to consolidate. Sideways, going sideways. Boom, boom. It created a resistance here, and it finally broke above the resistance to retest the zone, and it just stayed around this area until yesterday. Actually, this morning, market opened yesterday evening here. This was Sunday. And currencies and commodities, their markets open Sunday evenings. So you guys can see movement in the market Sunday evenings with commodities and currencies. However, stocks, they do not open on Sundays, so they open Monday morning for New York session. Um, but you know, different markets have their own time session. Now, here I'm talking about gold and commodities. So yesterday evening, the market opened, and then it resulted in a push down to the zone, came back up again, started to consolidate, and then it finally broke above 33.65 this morning, early this morning, to the push of the upside, and now it is on a trend, on an uptrend. And we can see here the technical indicator and the buy zone, right? I like to use TradingView because it provides these tools, these indicators. There's a technical meter here giving you a buy or a sell or a neutral status, right? So that's good to know there. Now today is mainly just news. We're just checking out news and how it correlates to the markets. You guys can see that, right? And I'm doing my best to explain it at the most fundamental level and how you guys can use news for your advantage, right? To make educated decision before entering the markets. You guys want to become aware of what's happening in the world, right? So this week we don't have too much going on. Last week we were booked last week with a lot of news events, and going back to next week, right? The Fed funds rate, they paused at 4.5, so they're waiting for policy adjustments. They're waiting for inflation to come down. They're waiting for They're waiting for any adjustments in the market. They're waiting for any for the tariff deals to be done, so that way they can make a decision whether or not to cut the rate. And so the fiscal policy right now with the U.S. government, they're dealing with tariffs, and they're I just read recently that they imposed a new tariff deal with India, and they're seeing they're proposing new tariff deals with Russia, and so that's an ongoing conversation, and um and that will result a push as well. Now, this morning, stocks surge as market rebounds from sell-off. Palantir shares jump ahead of the earnings report. Now we can look at Palantir. Palantir is a uh, a tech company. Now this is Palantir here. Palantir Technologies right now is at 160 a share, is pushing price to the upside. This morning, after last week's news, you see here, this was Friday when Friday's numbers were announced. It pushed the stock market down, right? You guys can see here, pushed down. And this morning on New York session, it pushed price up, right? So we have Palantir there. Palantir is a good stock to look into. Now I'll do my research, do your own research, but I have this on my watch list in my stock portfolio, and as well as SellPoint is another tech company. They deal with a lot of AI technology, and also Apploven Corporation. It's another tech company to look into. And I just like I mentioned, Palantir. And let me see here. Now this is a S&P rebounding back up from last week's numbers. We can see here it's bouncing back up. Job openings last week resulted lower numbers to 7.44 million. Previous numbers were 7.71. Now with job openings here, when there's a high amount of openings, it increases the US dollar, obviously, right? And it pushes down the risk of the assets. It pushes down the assets, increases the dollar. Now it results in a lower number. So Tuesday, we can see on Tuesday here, the US dollar. Where is Tuesday? Here. This was Tuesday last week. This was at 7 a.m. Arizona time. 7 a.m. here. You see how the dollar came down after the job openings numbers. When it happened, it came down afterwards, right? So keep in mind that every time there's a news event, wait after the numbers are released. So you guys can see here, they released a number 7.44 for job openings, and resulting a lower number compared to the previous number of 7.71. And with the dollar here, they released a number at 7 a.m. Arizona time, which is 10 a.m. Eastern. You guys want to wait after they release the numbers. So the after impact of news resulted a push down before the move back up, right? And this was Wednesday. And this candle right here, this was Wednesday. And what was Wednesday? Wednesday at 5 a.m., 5:30, it's GDP, quarter to quarter, resulting a 3.0%. So there was an increase in GDP at 3.0, resulting a push up to the upside. You see how the news and the markets, how it correlates with each other, how it impacts the markets, how it reacts. You see here, it happened at GDP numbers came out on Wednesday at 5:30 a.m. This is the hour chart. So on the 1 hour, you see here at 5 a.m. on Wednesday, resulted a push up when GDP numbers came out. So it came out positive at 3.0, resulting a bullish candle to the upside. So the more you guys study this, the more you guys see the more you guys study news, you guys can see the behavior of the markets. You guys can see the trend where it's going. And this was 11 a.m. You see here, this was GDP here, and this was the Fed rate right here on Wednesday. And later that morning at 11 a.m., announced the Fed rate. They paused it. So to, that was bullish for the dollar, right? Because it resulted a hawkish pause. You guys can see here the Fed funds rate hike or hawkish pause, resulting a push up on the US dollar and a push down to crypto, a push down to stocks, a push down to gold, right? And there's a cut or a dovish pivot. If they're predicting that September they're going to cut down the Fed rate by 25 basis points, it's going to result a dovish pivot, indicating that it's going to impact the dollar and the assets, and the dollar is going to push down when they cut the rates, resulting all the other assets to push up. So keep this in mind. You guys can take a screenshot of this. I'll be posting in my Telegram channel. Now I'll change some things here and there with this cheat, and because right now it's still I'm still editing. So, but this is something that I created, and it is something that is useful. And this is just a this was this is just it's not a guarantee, right? Because there's times that the US dollar and the assets they go in the same direction. they result the same uh, they go in the same direction pretty much, right? So this is you can use this as a reference, but it's not an answer, right? This is not a it's not a guaranteed result that it's going to impact the market reaction is going to be this way, right? All the time. So this is just a reference that you can go back to and see, okay, in order to make an educated decision, where the market is going to react, right? Where it's going to go. Now, here in this case, how the Fed rate paused the interest rate at 4.5, resulting in hawkish pause, it pushed the dollar to the upside. And we can see that here. It pushed the dollar to the upside, right? And with gold, we can see here, it pushed down. This is gold. When they paused the Fed rate, it pushed the assets down, right? This is gold right here. And this is the US dollar. You see the difference? You see the inverse relationship, the inverse correlation. And then we can also see crypto here. We can see crypto. This is Bitcoin here. Wednesday. Here's Wednesday. Wednesday, 11 a.m. Boom, right there. You see? And this is Bitcoin during the Fed news. Push price down. You see that? So, and this is how I study. This is how I study the news. I look over it. I study the numbers, and then I go and I do my markups here in TradingView. Now, like I said, this week we don't have too much going on. The news that I every Thursday there's unemployment claims, so they're predicting a forecast of 221. If it's less than that, we will see a push down. I'm sorry, a push up on the dollar. If it's greater than 221, we will see a push down on a dollar, right? So see here, unemployment claims. If it's a higher number, you'll see a push down on the dollar and a push up on the assets here. When you see a less number, when you see a number lesser than 221, then you'll see push a push up, right? Because the less amount of the unemployment claims, the less amount of numbers of unemployment claims is good for the economy, is good for the dollar. It pushes the dollar up, right? If there's a greater number of unemployment claims being filed, then that weakens the dollar and it weakens the economy because obviously we don't want too many unemployments going on, right? So, but that is that. And by the way, these are also signs of whenever we see low unemployment, high unemployment rate, we see a lower number of unemployment change. These are all signs of there's going to be a potential Fed cut, right? This coming September. So when you see these signs, right, when you see these numbers that, inflation is still above our 2% target rate. It is still above 2%. I believe last time I checked was at let me check here. Actually, I have a list out here. These are the updated numbers. So NFP 73,000, so that's low, right? For the month of July. CPI is at 2.7%. Retail sales went up by 0.6. Unemployment rate as of 4.2. Federal funds effective rate is at 4.33. So you see how the Fed paused the Fed rate between 4.25 to 4.5, but the actual number is at 4.33. 4.33% is the effective rate. So that's between, 4.25, 4.5. So that is that. Inflation rate right now is at 2.7, approximately 2.7. All right. So it's above our 2%. Now, the Fed, they look at the core PCE, okay? They look at the producer consumer expenditure, right? They look at the PCE at right now is at 2.68 year over year. So the Fed target is at 2%. So it's above our 2% goal, right? And so that is that. So these are the updated numbers. You see here, unemployment claims last week was at 218. Now these are the numbers that right now these are subject to change. So I change them every week whenever there's news. And so it's very, very important to keep track of all the numbers that you're looking at, right? It's good to keep track of all the numbers, all the data, so that way you can go back and use this as a reference, use this as records, right? To to for your education, for your research, and for you as a trader, as an investor, as a business owner, you got to know this information, right? You got to know uh, these numbers because it's crucial for your personal economy, right? Because it is your money, right, that you're putting into the markets. It is your every time you do business, every time you do a transaction, every time you use a dollar, right? You're participating in the financial markets, right? So you got to know what's happening with your dollar. Every dollar that you put in, that you take out, you want to keep track of it. And I actually posted a cash flow uh, tracker. If you go to my bio on my link, there's a free cash flow tracker. You guys can track every dollar you guys spend or invest. You guys can stay organized and know your income, know your expenses, and create a budget for yourself. So I posted that on my link in my channel. You guys can download it. You guys can use it. And it's very, very important to keep on track of your finances and also what's going on in the economy because is money is always moving, money is always flowing. So you want to know where your money is going, where your money is investing into, what you're putting it into, so that way you can keep it track and also keep aware of what's happening in the world, right? What's happening in the economy and how it impacts your your dollar and your investments and your business. So I appreciate you guys so much for listening in. I'll see you guys on Wednesday for Chart Work with Carlos for Chart Work Wednesdays. Today was just a market overview, going over the numbers, going over the economy, and also mentioning the Fed rate and how there's going to be a potential rate cut this September. So we'll stay on top of that, and I'll continue to show up every day for you guys, to show up every week for you guys, and I hope you guys are getting some value so far. I just relaunched my channel a couple weeks ago, so I'll be posting more content, more videos, and make sure to like and subscribe. I would really appreciate the support, and we can all grow together. We can all learn together. And but yeah, I'll see you guys on Wednesday. God bless.